All right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. I trust you've all had a great weekend. All right, so before we start, let's take a quick look at the disclaimer. All right, hi Ren. Good to see you as well. Right, good morning. Right, yeah, definitely we'll be covering cable and the Aussie as well for sure. Once we get, we'll start the analysis on the dollar index, of course, and then we'll make our way down to our major currency pairs, and of course we'll touch on cable and Aussie. Right, of course. Before we start, please take note of the disclaimer. Right, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, hi Ajay, good to see you as well. All right, before we dive into the charts and trading view, let's take a quick look at the economic calendar. It's actually a very heavy calendar this week. We've got three central bank announcements along with other news events as well. Right, we have, of course, the Federal Reserve taking center stage this week on the 18th of September, where they will release their statement, and everyone will be looking forward, paying close attention to Chairman Jerome Powell's press conference as well. And then on Thursday, on 19th of September, we have the Bank of England releasing its monetary policy statement, followed by the Bank of Japan, which wrap things up on Friday. Right, so this is the calendar for this week. Right, as I mentioned, there's quite a few things going on. We also have inflation data out of Canada tomorrow on Tuesday, 17th of September at 12:30 p.m. We also have U.S. retail sales out at the same time tomorrow. We've got inflation data out of the UK on Wednesday, 18th of September, and of course we have the highly anticipated monetary policy statement or FOMC meeting from by the Federal Reserve. So the statement is going to be released at 6 p.m. GMT time on Wednesday, 18th of September, followed by Chairman Jerome Powell's press conference at 6:30 p.m. Right, so the Fed is expected to cut uh, its interest rates or the Fed funds rate this week. Right, it's no surprise that they are going to cut uh, the Fed funds rate this week. It's just a question of how large will it be, based on Forex Factory. They have an estimate of 25 basis points, so they could cut it by a quarter of a percentage point from 5.5% down to 5.25%. Right, and then on Thursday, we also have employment data out of Australia, followed by the Bank of England's monetary policy statement as well at 11 a.m. Right, so based on the forecast by Forex Factory, the Bank of England is expected to maintain its official bank rate on hold at 5% after cutting it at the previous meeting. However, I think Bank of England may actually proceed with another rate cut on Thursday. And of course, on Friday, we have uh, Bank of Japan releasing its monetary policy statement, where they're expected to keep their key policy rate on hold. Remember, they raised their key policy rate at the previous central bank meeting, but for this week's meeting, it looks like they're going to keep rates on hold. Right. What will also be equally or maybe more important would be the press conference by Governor Kazuo Ueda, right? Later on, once the statement is released, this is also going to be highly critical to the direction of the yen. Right. So taking a look at the Fed funds rate, we can see the Fed funds rate ranges from 5.25% to 5%, the upper bound being 5.5%. And you can see here they've kept it at this level since the middle of 2023. Now, they have signaled very clearly Chairman Powell and his policymakers have signaled very clearly that they are indeed going to cut at this upcoming Fed funds meeting. Then it's just a question of how large will it be. Now, when we go on over to the CME FedWatch tool and we look at their target rate probabilities for the upcoming meeting, there is a slightly higher probability that the Fed will cut by 50 basis points instead of 25. So you can see here the probability for 50 basis point cut currently stands at 59%, while the probability for 25 basis cut stands at 41%. So for now, markets are leaning towards a slightly larger rate cut of 50 basis points on 18th of September. Now, of course, these target probabilities could change as we get closer to the meeting. So head on over to this website here, where you can find out or keep up to date with the latest target probability rates as we get closer to the FOMC meeting. Now, looking at the Bank of England's official bank rate, you can see it was currently at previously at 5.25%, and they cut it by 25 basis points in August to bring it down to 5%. Right. Although on Forex Factory, the forecast is indicating potential hold, but when you look at inflation in the UK, right, when you look at headline CPI on the left and core CPI on the right, they have moderated significantly lower, right, with headline CPI dropping to 2.2% year over year in July, and the core reading coming in at 3.3% year over year, right. Although it's still a little bit away from the BOE's target of 2%, inflation target of 2%, perhaps with inflation inching closer to their target, the Bank of England could actually move ahead with another rate cut. So be on the lookout for that, right? Although forecasts for now seem to suggest the Bank of England is going to hold rates or maintain rates at current levels, but I wouldn't rule out a surprise rate cut on Thursday. Right. And finally, we have the Bank of Japan on Friday, where they're expected to maintain their key policy rate at 0.25%. We can see here at the previous meeting, which was in July, they raised it up to 0.25%. And at the same time, they signaled that they would reduce the monthly bond buying from January to March in 2026. Now, all this moves, all these announcements at the prior meeting triggered a very strong demand for the yen, right? As the Bank of Japan raises its policy rate and reduces its bond buying program, it's more likely to trigger or function as a strong bullish catalyst for the Japanese yen. So that means currency pairs like the dollar yen and all the other yen crosses are likely to fall as well, which is what we saw over the last few weeks. Right, so at this current meeting or the upcoming meeting, they're expected to maintain rates at current levels, right? So if that were to happen, perhaps demand for the yen shouldn't pick up so strongly, and we may actually see the yen probably give back some of its gains that we've seen recently. All right, okay, now with that, okay, looking at inflation as well in Japan. On the left, we have the chart for headline CPI, and on the right, we have the chart for core CPI, where they're currently standing at 2.8 and 2.7% year over year. So inflation is not exactly running away in Japan, right? We're not seeing it accelerate very strongly over the last few months. It seems to be contained around these levels. So perhaps that may be enough for the Bank of Japan to maintain rates at current levels, as what has been forecasted by Forex Factory. All right, now with that, let's move on over to the charts and trading view and begin the analysis on the dollar index. Right, so we can see here since 2nd of July, right, since the 2nd of July, the dollar index was trading as high as 106.10, and it has dropped as low as 100.50 at the end of August, and it looks to be testing this level once more. Right, so a combination of rate cut expectations combined with slower inflation, right? Inflationary pressures are dissipating in the US, and also combined with a slower job market, right? We've seen ADP and BLS employment reports signal weaker job growth, combined with downward revisions for non-farm payrolls, and at the same time, of course, we are seeing the unemployment rate edge up quite strongly as well. So all of these factors have led to a strong loss for the US dollar, right? Demand for the US dollar has dropped considerably since the 2nd of July, and that's being reflected in the dollar index itself, right? We can see here it hit a low of 100.50 at the end of August, and it looks to be testing that level once more. So very clearly, right, we can see a very strong like multi-swing low support level. Right, we see a very strong multi-swing low support level for the dollar index at 100.55. Right, there's a nice little pullback here that occurred on 27th of July 2023. A nice swing low taking place here at the end of December, and of course this swing low taking place here on the 20th of August. Another swing low on the 6th of September, which highlights to us a very significant multi-swing low support level here. Now, this level here can be also identified as the pivot for this week. And of course, since we have FOMC meeting coming up, we may have a potential bearish breakout as well, right? As we head into the FOMC meeting, right? Rate cut expectations are building ever strongly. And of course, we may see, and because of that, we may see the dollar lose even further value, and that would mean dollar index is quite likely to break lower. Now, so should we see further bearish momentum pick up for the dollar index, right, then it's quite likely we may see a potential bearish breakout take place, and where that could happen is at this pivot level here, which is at 100.55. Now, if you look a little bit further below, right, we see a nice swing low taking place here, right? We see a nice swing, we see a nice swing low market structure taking place here in the middle of July, right? So this is quite clearly the next support level for the dollar index. So we can identify our first support for the dollar index, which is a swing low support that occurred in middle of July of 2023 at 99.74. Right, so that also means that should we see this bearish breakout take place, right? Take note, if we do see this bearish breakout take place through a pivot, we can then use the first support at 99.74 as a potential take profit zone for the dollar index. And if we zoom out a little bit further, right, you can see that the next support for the dollar index beyond 99.74 is likely to be at this level here at 99.33, right? Previously, this level functioned as like a multi-swing high resistance, right? With the first swing high taking place on 7th of March 2022, 14th of March 2022, and then the third one on 28th of March. So what was previously a multi-swing high resistance could now potentially function as support in the future. So that's a level to take note of. Should we see dollar index break through the pivot level and make a run or make a drop towards the first support. As of now, right, we don't really need to highlight that level for now, but it's something to take note of in the future should we see the dollar index drop even further. Right, now resistance, what about resistance? Okay, you can see when we look at the body of the daily candle here, we can see the dollar index like briefly finding support here on 5th of September. So this was a pretty decent support level on the 5th of September before finally giving way on the next day. So what was previously a support level could potentially be a resistance, but this is not going to be the strongest resistance level. Hence, we can identify this level at 101.05 as a potential intermediate resistance. Where I do see a major resistance coming in is at this overlap level here. Right, there's an overlap level at 101.77, which we can use to identify the first resistance. Very recently, it has functioned as a multi-swing high resistance as of 12th of September and on the 3rd of September before that. And previously, it functioned as a nice support in mid-December 2023. Right, so support here in middle of December. You can even argue here in the first week of January, it functioned as support as well. And after which it proceeded to function as resistance recently in the first and second weeks of September. So thus creating an overlap level, which we can identify as the first resistance. Now, on this nice downtrend here, when we see a series of lower highs, series of lower lows, we can also run a Fibonacci retracement, starting from this swing high on the 28th of June, going down to the swing low here on the 27th of August. Let's pull up all the fibs. We can see that the 23.6% retracement level also aligns very well with the first resistance or the overlap resistance here. Right, and where the 38.2% retracement lies, I see another nice overlap level as well. This also can be identified as another overlap resistance at 102.65. We can label this as the second resistance, and it also has the presence of a 38.2% Fibonacci retracement. So we can keep 23 and 38 and get rid of the others for now. Right, so these are the key resistance levels and support levels for the dollar index for this week, right? Or rather, as of today, right? We can see the pivot level is actually a multi-swing low support level. This is a pretty strong support level, but given that we have high rate cut expectations because of the FOMC meeting coming up on Wednesday, 18th of September, we could have a potential bearish breakout take place through the pivot. So if that bearish breakout does occur, right, and the dollar index continues to drop lower, we can then target the first support at 99.74 as a potential take profit zone for the dollar index. Remember, there's intermediate resistance level at 101.05 and the first major resistance comes in at 101.77. Right, so these are the key levels for the dollar index on the daily time frame, and take note of that. We've got to take note of these levels, and at the same time, of course, we have the FOMC meeting coming up on Wednesday, 18th of September. Right, okay, so we've done the dollar index. Let's take a look at cable and Aussie, right, as there's a request from Ren. And of course, we'll take a look at dollar yen because of the central bank meeting by the Bank of Japan. And we'll take a look at the commodities after that. So let's look at cable. Cables is going to be experiencing pretty high volatility this week as we've got the Bank of England with its monetary policy decision on Thursday, 19th of September. Now we can see due to the demand for the US dollar dropping quite significantly, right? You can see here in the dollar index, demand for the dollar index has dropped significantly. This creates a lot of tailwind for currency pairs like the pound, the Aussie, and the euro as well. Right. So after pulling back last Thursday, the cable found support at around 1.3036 and staged a pretty nice rebound. So you can see here, this level here is actually a nice overlap level. Right. This is a nice overlap level at 1.3045, which we can identify as the first support. Now, we can see here there's a nice swing high resistance that took place on the 27th of August. And if you zoom out a little bit further, you can see it's actually a pretty significant overlap level as well. Because previously, you can see there's another prior swing high resistance that occurred on 23rd of March on 2022. And this level here also previously functioned as support in February of 2022. So this actually is overlap, is like an overlap resistance level, which we can identify as the pivot. Right, so the pivot is an overlap resistance level here, and we can potentially expect pound to rise up towards this level in the first half of the week. Remember, the FOMC meeting takes place before the Bank of England's monetary policy meeting, so that means the US dollar is quite likely to weaken further and weaken ahead of the pound. So that means this currency pair is likely to make a move up towards the pivot level here, which is actually an overlap resistance. Right, so take note, if you are going to go long on the cable, right, you can identify a potential take profit level at around this pivot here, which is actually an overlap resistance. Right, so we can expect cable to make a run towards this pivot level in the first half of the week, and after that, should we see a very dovish Bank of England, or the very dovish move by the Bank of England, perhaps this recent rise in the cable could be stalled, and we may see a slight pullback as well. But for now, in the first half of the week at least, we should see this currency pair being supported, and we can expect cable to rise up towards its pivot level here. So identifying a potential take profit zone at this pivot level would be a suitable area to do so, right? Okay, since when you zoom out a little bit, we can see that this is actually a very strong down move as well, downtrend for cable, right? Since June of 2021, it hit a high of 1.4230, and after which it proceeded to drop as low as 1.0515 in September of 2022. So we can actually probably draw a nice Fibonacci retracement on this downtrend here, starting from this swing high on 1st of June 2021, ending with the swing low here. Where did it go? Ending with this swing low here. Is this the one? Yep. Ending with this swing low here on 26th of September 2022. Okay, let's pull up all the fibs. It's probably, we can use the 78.6%. Yep, we can see the 78.6% line up pretty well, or pretty close to this overlap resistance, which is the pivot. So let's just keep 78.6% and mark it up as a resistance zone here. Right, and then when we look a little bit higher up, right, there's another nice multiple swing highs taking place, right? There's a swing high resistance taking place in mid-Jan 2022, another swing high resistance here in October of 2021, and another one here as well. So the next resistance level for cable is likely to come in around this level here. Which is at 1.3854. Right, so you can see here the moves have been really overextended for many of the currency pairs, so that's why we have to like zoom out really far to see where the next major resistance or support levels sit at. Right, okay, so once again we can see, right, on the daily time frame for cable this currency pair is currently trading around 1.3190, right? Is quite likely to continue to climb higher and rise towards this pivot level at 1.3302. 1.3302 is an overlap resistance level that has the presence of a 78.6% retracement, Fibonacci retracement just above it. So if you're going long on this currency pair, you can identify a suitable take profit level close to this pivot here. And especially with the FOMC meeting dropping first ahead of the Bank of England's meeting, we can expect the dollar to come under significant selling pressures first, which is quite likely going to cause this currency pair to move higher as well. Now, this overlap support at 1.3045 may also have a Fibonacci retracement that we could use, because I see a nice uptrend here that began from 8th of August, ending on the 28th of August. Right, so let's start a retracement starting from this swing low on 8th of August, ending with a swing high here on the 27th. I believe it's the 50%, or it's the 38.2% retracement level that aligns pretty well with the first support. Right, take note. And if I were to identify the next potential support level for the cable, it would probably be, don't really see anything else apart from this swing low here. Maybe there might be like an intermediate support level here, right? It's pretty decent overlap level here as well. Like the swing high resistance here that occurred on 8th of March, another swing high here on the 12th of June, after which there's a little bit of consolidation here on 30th of July and on the 15th of August as well. So this could be another strong support level as well. It looks like to be a pretty decent overlap level at 1.2858, which we can use to highlight as the second support. Right, but for now, right, we are expecting cable to continue to climb higher as we see the dollar index break lower. Now, of course, if we do see this bearish breakout for the dollar index take place, right, if this bearish breakout takes place, then of course we're going to see cable continue to climb even higher and at least hit the pivot level, which is the overlap resistance. All right, now let's take a look at the Aussie, and then we'll go on over to the dollar yen. Right, so looking at the Aussie as well, right, you can see here the market structure is quite similar to the pound, right? We saw it rise very strongly in the first couple of weeks of August and then pulling back in the first week of September. Very similar market structure and timings as well. Now, of course, with the dollar index selling off, right, demand for the dollar looking weak, we can also expect this currency pair to rise up towards its pivot level here, right? So if you decide to go long on the Aussie, right, take note that this pivot level here is actually a multi-swing high resistance. We can see the Aussie running through resistance here on 12th of July of this year, and of course running through resistance once more on the 29th of August as well. So this creates a multi-swing high resistance level, which we can identify as a potential take profit zone. So any long Aussie positions that you may have for this week, right, and especially if you see this currency pair climb even higher, right, we can target the pivot level here as a potential take profit zone for any long Aussie trades that you may have. Now, with regards to support, there's a nice swing low support level that took place here on 11th of September. And not only is this a swing low support level, it also has the presence of a 38.2% Fibonacci retracement. Right, so this retracement was found starting from here, from this swing low on the 5th of August, going up to this swing high here on the 29th of August, and we can see the 38.2% retracement level aligned almost exactly with the swing low support or the first support at 66.45. Right, pivot has been identified as a multi-swing high resistance. Right, take note this is going to be a pretty strong barrier here. So identifying your take profit zone for any long Aussie positions would be a suitable thing to do so over here. And the next resistance beyond this multi-swing high at 67 or pretty much 68 cents comes in at 68.82. We can see another multi-swing high resistance here. In fact, we have three swing highs taking place. The first of which begins on 50, which occurred on 15th of June 2023. The second swing high resistance taking place on 13th of July 2023, and the third one coming in or taking place right at the end of December 28th December 2023. So you can see this is another multi-swing high resistance that's been in place for quite a while, and it also has the presence of 137% extension level. So this Fibonacci extension level was found by running a retracement from here. Oops, hang on. Let me try and capture this retracement exactly. Oops. Oh, right, sorry. Yeah, this retracement begins from here. Right, this retracement starts from this swing high on the 29th of August ending with the swing low here on the 11th of September. And we can see the Fibonacci extension at 127% aligns pretty well with this multi-swing high resistance. So the Fibonacci extension adds further significance to the strength of this resistance level here. Right, so take note, these are the key levels for the Aussie for this week, right? And as of today as well. And of course, if we do see the dollar index dropping lower, it's going to provide a tailwind for this currency pair, and we can then target this pivot level here at 68 cents as a potential take profit zone. All right, now let's move on over to dollar yen. Right, so looking at dollar yen, right, we can see this currency pair has dropped significantly, right? And if we look at all the other yen crosses, you're going to see a very similar market structure as well, right? Part of the reason of this increased demand for the yen, of course, has been due to intervention measures by the Bank of Japan, right? In mid-July, we had the Bank of Japan intervening in the open market, open currency market. So what that means is they are selling their foreign treasuries, foreign holdings, foreign reserves, which consists of U.S. Treasury bonds and the US dollar, and using the sales of those proceeds or the proceeds of those sales to buy back the yen in the open market, right? So when they perform an intervention measure, they're buying yen in the open market, which causes the yen to appreciate quite significantly, and that causes currency pairs like the dollar yen to drop very sharply. So we had intervention measures by the Bank of Japan in mid-July, combined with followed by the Bank of Japan raising its key policy rate at the end of July, right? 31st August. Wednesday was the last, was the previous date where the Bank of Japan had its monetary policy meeting, where they raised its key policy rate, which triggered another round of strong demand for the yen, which of course then causes the dollar yen to drop very sharply as well. Right, so we can see here dollar yen has pretty much given up all its gains since January of this year, right? It's actually dropped below and it's gone negative in terms of year-to-date returns for the dollar yen, right? You can see a very strong moves in the dollar yen here. And let's see now, let's try and identify where the next support and resistance levels could lie for this currency pair, right? We can see it's currently, previously this was, I would say, a pretty strong swing low support level, right? I would say this was a pretty strong swing low support level, which got taken out very convincingly today, right? On Friday, it tested this level, right? Last Friday, 13th of September, dollar yen tested this prior swing low support here, but today we saw a clean break below this level here. So this level now can be identified as a potential resistance, right? This is could be a potential first resistance level here at 140.96. Now with dollar yen dropping lower, the pivot level is going to be a potential support area here. So now what I see is, I see a nice swing low support, like a multi-swing low support here that occurred on 13th of July 2023, and then once more on the 28th of July. So this is like a multi-swing low support, which we can identify as the pivot. Right, so we can probably expect dollar yen to drop lower towards this pivot level here. Right, especially with the demand for the dollar falling off as well, right, with demand for the dollar looking weak, that's also going to compound the downward move in the dollar yen. Now, what about support? The next support level, right, you can see, right, a lot of the moves are really overextended and is broken through a lot of key levels. We have to go back to April of 2023 to find the next potential support. I see a pretty decent overlap level here. This overlap level is at 133.59. You can see that it functioned as resistance on 31st of March 2023, resistance once more on the 11th of April, after which it proceeded to function as support on 27th of April, 4th of May, and then again on the 11th of May. So this creates a nice overlap support level at 133.59, which we can use as in the identification of the first support for dollar yen. Right, so we've seen a clean break for dollar yen today below or through the prior swing low support, right? This was a swing low support at 140.96. We see a clean break below this level took place this morning. So what was previously a support level can now be potentially be resistance. So that's how we've identified the first resistance for dollar yen. The pivot level at 138.05 is actually another multi-swing low support, right, taking place mid-July of 2023 and at the end of July of that same year. So we can see that so this pivot level is a support, strong multi swing low support area. And should we see dollar yen drop even further, we can then identify the pivot as a potential take profit zone. So take note, should we see dollar yen continue to slide lower, we can then identify a suitable take profit level around this pivot here. And of course, should dollar yen continue to slide even lower, then the next support level comes in at 133.59, which is this overlap level. Now, let's see, can we use any Fibonacci uh, uh, extensions or projections in our analysis? Let's try and take a look. Okay, maybe we can run a projection from here. This high on the 3rd of July going down to 0.2 on 5th of August and ending with 0.3 on the 16th of August. Key projection levels sit at 61.8%, 78.6% and 100%. Right, so I think for now we can use the 61 and 78.6%, as we see 78.6% aligned very well with the first support. And of course, at the same time, we see the 61.8% sit quite close to where the pivot is as well. Right, so these Fibonacci projection levels help to add further significance to the strength of these support zones here. Right, let's see if there's anything else we can use. Maybe we can run a Fibonacci retracement from this swing low here on the 28th of December 2023 going up to this swing high on the 3rd of July. For this retracement level, I'm going to be looking for extensions. So key extension levels sit at 127 and 161%. And we can see the 127% extension level aligned pretty close to the first support as well. So we can see we have a Fibonacci confluence. So what does a Fibonacci confluence mean? It simply means we have two Fibonacci levels at a particular price level or at a particular price zone. So in this example, we have the Fibonacci extension at 127%, aligned pretty close with the Fibonacci projection at 78.6%, right? So this adds further significance to the strength of this support zone here. And of course, we can see the 161% extension way below, right? But this is not valid. I mean, this is not, this is not necessary for now, right? Because this level is simply too far from where this currency pair is currently trading. But should we see the dollar yen drop even lower, right? We can see this swing low support that occurred in January of 2023 also sit quite close to the Fibonacci extension at 161%. So this is a level that perhaps we may need in the future, but as of now, it's simply too far from where this currency pair is currently trading, so we don't need it. But just maybe keep a mental note of this level should we see the dollar yen break lower or even lower. All right, so these are the key levels for the dollar yen, and with FOMC coming up first, maybe we are likely to see this currency pair drop lower, and if this bearish momentum were to extend even further, right, we can then target the pivot level at 138.05 as a potential take profit zone for any short dollar yen trades that we may have. And of course, come Friday, we have the Bank of Japan with its own monetary policy statement, and should we see another rate cut, right? Remember, for now, market forecasts are expecting the Bank of Japan to keep rates on hold. However, should we see a surprise rate hike combined with a hawkish commentary by the Bank of Japan's governor, that could trigger another round of stronger demand for the yen, and we could potentially see this currency pair drop even lower. Right, so take note, these levels may be tested or may be broken as we approach Friday, but as of now, yep, these are the key levels to watch out for the dollar yen. All right, now let's move on over to the commodities. We take a look at gold. XAU USD is the instrument that tracks spot gold futures, and we can see gold has made a new intraday all-time high today at $2,589.68 per ounce, right? If you look here, or maybe just look at it on the 1 hour time frame, it's a little bit more easier, right? So this intraday all-time high was set today at 6 a.m. GMT. At 6 a.m. GMT, we saw a new intraday all-time high for spot gold prices, hitting as high as $2,590 per cents, right? $2,590 per ounce, right? So quite clearly, this is currently a major resistance level here, which we can identify as the pivot. Now, why do I say that? Because if we see dollar index make a potential bearish breakout through the pivot here, then we should also expect gold to make a bullish breakout above its own pivot. Now, looking at it on the 1 hour time frame is a little bit more clearer, right? So of course, should we see the value of the US dollar drop even lower, right? And we see dollar index make that bearish breakout, then quite likely we could see gold make a new all-time high and climb higher, make its own bullish breakout through its pivot level here. So the pivot level for gold is at $2,589.36. Now let's come back to the daily time frame. So we could see a potential bullish breakout for gold. And if that were to happen, how could we possibly identify the next resistance level, right? We can see gold has really extended, has really appreciated in 2024, right? It began the year trading around $2,035 per ounce, and now it's climbed as high as almost 2,590. Now, in such a scenario, we can see we'd probably have to, in this case, we're going to have to move on over to the monthly time frame and use a Fibonacci projection, right? So we can see here, these moves are pretty extended, right? So we're going to use a projection level to help us identify the next resistance level. So we're going to run the projection from here. This low on September 1999, going up to 0.2, September 2011, and ending at 0.3, which is at November of 2015. Like, key projection levels sit at 61, 78, and 100%. We can clearly see 61 and 78.6% have been exceeded. So quite clearly, we don't need these levels, but we can keep the 100% projection. So in this case, we're using the 100% Fibonacci projection on the monthly time frame to help us identify the next potential resistance barrier for gold prices here. So you can see, right, there's nothing for us to reference in the past. There's no other swing high resistance, overlap, or pullback resistance that we can rely on. So in such a scenario, we have to rely on Fibonacci tools, and in this case, we are using the Fibonacci projection on the monthly time frame to help us identify the next potential resistance level for gold. Now, coming back to the daily time frame, we can see that this projection level, let's just fine tune it a little bit, try to be as accurate as possible. Yeah, okay, this is better. So we can see that this projection level sits at $2,719 per ounce, right? Although it's pretty far from where spot gold price is trading, but of course, remember, we have nothing else to rely on. So I think using this projection level to help us identify the next resistance is a pretty decent way to do so. Right, we can probably try and use a Fibonacci extension as well. So let's try one. I think we may be able to use Fibonacci extension from here. Nope, you can see here the extension levels. What about from here? Maybe stretching it a bit. Nope, you can see all the extension levels have been surpassed. Right, so we really can't use anything else, right? So in this case, remember, we've used the Fibonacci projection on the monthly time frame to help us identify the next resistance barrier for spot gold prices. Now, what about support? Right, we can see here this level at 2,520 previously functioned as a pretty decent resistance area, right? We can see gold being restricted under this level from 20th of August till the 11th of September, so almost a period of about 3 weeks, right? It was remained capped under this level here. So what was previously a resistance level can now potentially function as support. So that's how we've identified the first support for spot gold, which is at $2,531. Right, let's see. Now we can probably run a Fibonacci retracement starting from this swing low here on 5th of August, going up to the intraday all-time high that was formed just today. Let's pull up all the fibs. We can see that the 23.6% retracement sits quite close to the first support, and I see the 50% sitting aligning well with another overlap level. So let's keep 23 and 50. And now when we look at this level here, we can see 2,483 is a nice overlap as well. This level previously functioned as resistance on 17th of July, 2nd of August, and then 14th of August, after which it proceeded to function as support on 22nd of August, 3rd of September, and then again on 9th of September, right? So this is a pretty strong overlap level, which has the presence of a 50% Fibonacci retracement, and we can use this level in the identification of the second support. Right. So take note, we may have a potential bullish breakout opportunity for gold, right? Especially if we do see, of course, demand for the dollar continue to tank. If demand for the dollar tanks, we are likely to see a bearish breakout take place for the dollar index through the pivot. And then we can target the first support as a potential take profit zone for any short dollar index trades. And conversely, that should any bearish breakout for the dollar index is quite likely to trigger a bullish breakout for gold, and then we can target, of course, first resistance at the 100% Fibonacci projection is still quite a fair distance, right? Maybe there's another intermediate level that I can identify. Perhaps it's another projection, right? Let's start the projection from here. 5th of August, going up to this high on the 20th of August, coming down to this low here on the 4th of September. Let's look at all the projection levels. Right, I think we can use once again the 100% projection as well. So let's keep 100% here. And then I would say the 100% projection on the monthly time frame can be identified as the second resistance, and the first, a much more immediate barrier, could be identified by this second projection level at the 100%. So first resistance for gold is at $2,639. Second resistance is at 2,719, both of which have been identified by a Fibonacci projection on the daily and monthly time frames. All right, so these are the key levels for gold. Let's take a look at crude oil, right? XTI USD is an instrument that tracks crude oil futures, WTI oil futures. And we can see this commodity has dropped quite significantly as well, right? Weaker global demand, right? And also potential supply increases by OPEC as well, right? I think they've pushed back the recent supply increase back to December, right? Initially, OPEC was expected to increase some production quota from the month of October, but it seems like that decision has now been pushed back to December, right? So, but even then, global demand for crude oil looks pretty weak, which has, of course, caused prices to remain under pressure, right? So we can see crude prices dropping as low as $65.64 last week on Tuesday, 10th of September, right? And it looks to be heading south once more, right? So when I look across this level here, right, this is actually a pretty strong support, right? It's actually like a very strong swing low support level that's been in place since 24th of March 2023, right? We can see crude oil has bounced off this level several times. It's like a multi-swing low support at $66.68, which we can identify as the pivot here, right? So we're expecting it to drop towards this level. So should you have any short positions on crude oil, right, we can then target this pivot level here as a potential take profit zone. Remember, this pivot is a strong multi-swing low support level, and should we see crude prices drop once more towards this area, it could potentially hold as well. So that's why the pivot can be used as a potential take profit level should you have any short trades. Now, what about the next support level for crude oil, right? WTI oil is quite likely. It looks to be around this level here at $62, right? $62 per barrel here is $62, or yeah, it's another multi-swing low support, right? We see strong support taking place on 21st of May 2021, 23rd of August 2021, and we can even argue here on 2nd of December 2021, crude prices found support before staging a very strong rebound. So this is how we've identified the first support for XTI USD, which is around $62 per barrel. The pivot is a multi-swing low support level at around $66.70. Now, what about resistance? Right, we can see here as crude prices rebounded in the second half of last week, it stalled at around $70.50 per barrel here. Right, so and when I look across, this looks like to be a pretty decent overlap resistance barrier. And you can see previously this level functioned as support on 3rd of Jan till 18th of Jan, and then it proceeded to function as resistance last Friday. So this creates an overlap level, which we can use in the identification of the first resistance. Right, so take note, these are the key levels for XTI USD. This is the instrument that tracks WTI crude oil futures. And if we do see crude prices slide even lower, identifying your take profit zone for any short trades at around this pivot level of $66.70 is a suitable area to do so. Right. Okay, now let's move on over to the indices. Let's take a look at the 40 and then we'll take a look at US 500. And of course, should there be any other requests for any other instruments, do let me know, right? Do drop your request in the chat box and I'll be more than happy to go through the analysis with you. Now looking at the 40, the 40 is an instrument that tracks the DAX futures. And we can see uh, this instrument stabilizing at around 18,262 last week at the beginning of the week before staging a pretty nice rebound on Thursday and Friday. Now today it looks like to be pulling back slightly, but it's quite likely we may see equity markets being supported as well, right? With rate cut expectations hinging very high on the tape in market sentiment, that could be enough for markets to be supported for now. So that's why I think potentially we could see most equity markets continue to perhaps grind a little bit higher as we head into the FOMC meeting. Right, so we can see the pivot for the DAX has been identified at 18,971. This pivot level is actually a strong swing high resistance that occurred at the beginning of September. And not only is it a strong swing high resistance, it also has the presence of a Fibonacci extension at 127%. So this extension level was found starting from here. This swing high on the 31st of July ending with the swing low on the 5th of August. We can see that the 137% extension level aligns pretty well with this swing high resistance, which has been used as the pivot. So if we do see the DAX continuing to climb higher, we can then use this pivot to identify a potential take profit zone for any long trades that you may have, right? So for any long trades that you may have for the DAX, right, identifying your pivot, your take profit level at around this pivot is a suitable area to do so. Now the next resistance, remember 3rd of September, we saw a new intraday all-time high for the DAX, which was at around 19,002. So in this case, to identify the next resistance level, we have relied on a Fibonacci projection. So this projection began from here, 0.1 on the 5th of August, going up to 0.2, which is the intraday all-time high for DAX on the 3rd of September, and ending with 0.3, which is on the 10th of September, and we can see the 61.8 projection level sitting at 19,404. So that's how we've identified the first resistance for the DAX, and of course, quite clearly, the first support for the DAX is at 18,262, which is a swing low support level that occurred in the middle of last week. And to top it off, we also have a 38.2% Fibonacci retracement aligning very well with this swing low here. So this 38.2% retracement level was found by starting from here, this swing low on the 5th of August, going up to the intraday all-time high on the 3rd of September. Right, so these are the key levels for the DAX. And let's just move on over to US 500. Right, before we do that, I'm just going to launch a poll as well. Truly appreciate it if you guys could give your feedback with regards to today's webinar. Right, okay, so with that, now let's look at US 500, and we see US 500 in a similar market structure as well, and we see it rising towards its pivot as well. Right, this pivot is also like a multi-swing high resistance. Right, the intraday all-time high for US 500. This is the instrument that tracks the S&P 500 futures. We can see it hit an intraday all-time high on 16th of July, and then once again it came close to this level on the 26th of August, and of course on the 3rd of September, and it looks to be running towards this level once more. Right, making another attempt, a third or fourth attempt towards the pivot here. So this pivot is like a multi-swing high resistance. And should you have any long positions on US 500, identifying your take profit level at around this pivot is probably a suitable area to do so. Right, so we can expect equity markets to perhaps continue grinding higher as we head into the FOMC meeting. Remember, rate cut expectations are helping to fuel or keep markets supported as well. So we could see global equity markets continue to grind higher. Right, so pivot level At 5,669 is the multi-swing high resistance for the US 500, and the next resistance level at 5,830 has been identified by a Fibonacci projection at 78.6%. Now this projection level was found by starting from here, first point on 5th of August, second here on the 3rd of September, and ending at point 3, which is this low on the 6th of September. So that's how we found this Fibonacci projection level. And if you look at all the projections, key projections, we can see 61.8 sits at around 5,734 and 100% here. So if we do see US 500 continue to climb higher, then the next resistance area is potentially going to come in at around the 100% projection, which is at 5,953. Right, first support is clear. It is the swing low that occurred on 6th of September, and the next support level is also very clear as well. Is this swing low that occurred on the 7th and 8th of August. Right, so these are the key levels for the US 500. Right, thanks everyone for those who have voted in the poll as well. Really appreciate it. Right, okay, as we come towards the end of today's webinar, right, is there any requests? Are there any requests for any other instruments? We've covered pretty much everything, I guess. The dollar index, the major currency pairs as well, and especially for dollar yen and cable as well, as we've got interest rate decisions coming up this week. We've looked at the commodities and the indices. Is there anything else that you'd like me to cover? Right, if not, we still got a little bit of time, so let's wrap things up maybe with the euro. Right, let's take a look at the euro as well. Right, we can see the euro has a similar market structure to the cable as well. Right, so you can see they have a pretty strong positive correlation, and with the euro rising strongly, I see a nice swing high resistance here at 23rd of August. Right, if we zoom out a little bit, okay, there's nothing else. This is the only swing high resistance. So this swing high resistance here can be identified as the pivot level, right? And you can identify a potential take profit zone for any long euro trades at around this pivot here, which is at 1.1192. Right, this is a swing high resistance level that's been in place since the 23rd of August, and we are likely to see the euro climb higher. However, identifying your a potential take profit zone at around the pivot is a suitable area to do so. Now, beyond this swing high resistance that occurred on the 23rd of August, there's another swing high resistance that occurred in mid-July of 2023. So this is where the second resistance for the euro sits at. Right, this where the next resistance level is actually the first resistance. Pivot is the immediate resistance here. Right, so this is another strong barrier at around 1.1250. As you can see here, this goes as high as 1.1275. Right, it's a strong resistance area for the euro, and the pivot is a swing high resistance that occurred in the 3rd week of August. Now, looking at support, we see a nice swing low taking place here on 11th of September. So quite clearly, this is where the first support for the euro sits. This is at 1.1011. Now we can also run a nice Fibonacci retracement on this uptrend that began on the 1st of August. So let's start this retracement from here. 1st of August going up to this swing high on the 26th of August. We can see the 50% retracement aligning just underneath it here, so we can probably use that. And let's see if there's anything else that we can use. Let me see. Probably we can use the 61 as well, right? So let's just keep 50 and 61. So we can see here strong support underneath at around the 50% retracement level. And at the same time, I would say I see another overlap level. Okay, maybe not the best overlap level here, but it's quite close to the 61.8% retracement. So I think this might be a level that's going to be pretty strong as well. That's at 1.0950. We can see that this level previously functioned as resistance on 11th of March, functioning as resistance once more in mid-July, and then we can see it functioning as support here on 15th of August. So this creates an overlap level that aligns close to the 61.8% Fibonacci retracement, and we can use this level in the identification of the second support for the euro. Right, okay, so let's see. Yep. These is there an ascending trend line that I could use? Let me see. Okay, no, not really. Probably no, it's just only a couple of touches, right? Not really a strong ascending trend line. Let's just leave it out for now. Okay, so these are the key levels for the euro. So take note, you can identify a potential take profit zone for the pivot at around 1.1192, which is the swing high resistance that occurred on the 26th of August. Right, okay, and right, okay, so if there's no further requests, all right, then thanks everyone for tuning in to today's live analysis session. Do look out for all upcoming webinars by IC Markets for the rest of this week. And of course, before we wrap up, don't forget it's a very heavy calendar, right? We've got 3 central bank meetings along with other market moving events as well. Right, we've got inflation data out of Canada tomorrow, Tuesday, 17th of September. We also have retail sales from the US on 17th of September as well, Tuesday. We've got inflation data out of the UK on Wednesday, the 18th. And of course, we have the FOMC statement and the press conference by Chairman Jerome Powell on the 18th of September. That's at 6 p.m. GMT and 6:30 p.m. GMT, respectively. And on Thursday, we have the Bank of England lining up with their monetary policy statement. That's at 11 a.m. GMT on Thursday, 19th of September. We also have Aussie employment data earlier in the day. And on Friday, we've got the Bank of Japan releasing its monetary policy statement and its press conference as well. Take note, the Bank of Japan likes to keep markets guessing, so they don't fix or they don't release their schedule as to when the statement is going to be dropped and also when the press conference is going to commence. So they like to keep markets guessing. So however, once the statement is released, we can expect the press conference to be delivered about a couple of hours after. So that's what usually happens for the Bank of Japan. All right, so take note everyone of the calendar for this week. It's a very heavy calendar with 3 major interest rate decisions by 3 major central banks. All right, thanks everyone for tuning in. Have a great trading week, and I'll catch you all in the next webinar.